Good morning, everyone.
Good morning, everyone. On behalf of the Center for Budget Studies, CUSAT, I warmly welcome all the participants and distinguished guests to this online training program on advanced financial literacy. In today's rapidly changing financial world, financial literacy is no longer just an optional life skill, it is an essential survival skill. From managing personal savings and investments to understanding digital payments, mutual funds, stock markets, insurance, and financial fraud prevention, every individual needs the knowledge and confidence to make informed financial decisions. Programs like this help us move beyond basic awareness and develop a deeper understanding of financial planning, wealth creation, and responsible financial behavior. We are indeed privileged to have with us an eminent resource person, Ms. Himani Lath, to lead today's session. Ms. Himani is a SEBI SMART Trainer and a highly experienced financial literacy expert with nearly 2 decades of experience in the capital market sector. She worked with the National Securities Depository Limited for 17 years, where she handled important managerial responsibilities, including audits, awareness programs, and government projects. She has conducted more than 500 financial awareness programs in association with SEBI and other capital market regulators, reaching students, professionals, teachers, corporate employees, NGOs, armed forces personnel, and many other groups across India. Currently, she is associated as a trainer with leading institutions and regulators, including Securities and Exchange Board of India, National Stock Exchange of India, Bombay Stock Exchange, National Institute of Securities Markets, and several others. She has also been featured in the DD National Talk Show Ye Hai India, representing SEBI, and has received recognition as the best trainer at the International Financial Literacy Conclave. Ma'am, we are honored by your presence and truly grateful for your valuable time. Before we begin, I would also like to inform all participants that the questions and doubts will be taken together at the end of the session. Meanwhile, you may kindly post your questions in the chat box during the session so that we can address them during the interactive discussion segment after the presentation. Now, I warmly invite Ms. Himani to take over the session and share her valuable insights on advanced financial literacy. Welcome, ma'am.
Thank you, Anjali ma'am, for this warm introduction. Hello, everyone. Good morning and welcome to this program. I hope this session is going to be really valuable for all of you, and it's really going to clear all your doubts, all your questions. And, this is a very, very important topic that we are going to discuss today. You must have heard certain things earlier also, but let's just make this session a very interactive session. Let's just try to take benefit out of this. And I can see almost 90 plus participants are there in the meeting, and I'm glad that we have such good, crowd also here. So, like we all, talk about financial literacy all the time. Do you think it's important? I believe it's really, really important. And why we, teach these topics at a very early age, because I understand its value. When I started my job around 18 years back, when I joined NSDL, with the first salary, what did I do? Did I spend all of that? No, actually, I started investing. Mutual funds, stock market at that point of time were very, spectacle products. People never used to invest in these products so much. But at that point, I started accumulating a lot of knowledge about it, what this product is, how it works, and I started my investments. Okay, now when I look back and see in these 17, 18 years, how my investment has performed. So I can proudly say that, yes, I have created wealth for myself and for my family, of course. So this never happened in just few months or few years. The biggest mistake that we all do is we start investing and we don't have patience. So having patience, having consistency will always play a very important role in your life. So everything is important. It's not just that deciding investing is important. No, deciding the right product is important. Deciding the tenure, that is, the longer you keep your investments, the better will be the returns. So all these things are really matter. And what really matters is that you start early. When you lose important time of your life, then the investments will also not perform that much. So when we are expecting good wealth, then starting early will definitely help us. Okay. So I hope you all would like to be rich in life. Everyone wants to be rich in life because we have so many goals, so many big things to achieve, and that can only be possible with money. Everything is surrounded by money. There was one very interesting song. I know I'm speaking in the Hindi, but I hope you somewhat relate to it. That, na baap bada na bhaiya, sabse bada rupaiya. That was a very old song. And that's actually the reality, because everything that we want in life is surrounded by money. And if we have enough money, we are able to handle every situation, every goal that we have. So can you students just write something in the chat box? What is your goal in life? What do you want to achieve? Can you write, and let's make this session interactive? I'm just looking at the chats. Okay. What do you think is important? Like, what do you want to achieve? Or maybe you can write that, yes, I want to be rich, I want to be crorepati. Or if you don't feel like that, that is also okay. You can say, though, I don't want money in life. That can be also one of the answers. Yeah. Can we interact? Can we write? I want to understand you more. Okay. If not that, then you can just write what you are studying currently. Maybe your year, your stream. So Amey has written this answer: a suitable and fulfilled life. That's what you want. Okay, great. And any more answers? So I will keep asking questions throughout the session. That's how I take my sessions. Okay, so you have to be interactive, and it makes interesting also. If you one-sided talk is always boring, no? Yeah, anyone else? We have 107 participants as of now. Okay, maybe if you have not decided your goals, you can just write, no, I've not decided. I'm still thinking. Anything. Want to be a responsible citizen. That's really great by giving awareness, especially financial literacy. Okay, Tariq ji, nice. And what about other students? Okay, so your teachers are also there, your faculty members are also there, and they're also listening to you. They're looking at your responses. And one more thing I wanted to brief, which ma'am skipped to tell you, that we are going to issue a participation certificate to all of you. So that will again be based on how interactive you are. I'm still waiting. Asha, tell me, students, do you think money is important? Fatima has also written to become financially independent and to live a peaceful life. Absolutely correct. I also relate with you because, ultimately, when we have money, we can do anything. Money brings choices for us. And when we have choices and everything in life, we feel a kind of fulfillment and we feel some kind of peace also. Correct? Money wise, enough money to deal with basic needs and little more, but other than that, a peaceful and contented life. I think this is a very common answer which is coming, that we all want to live a peaceful life. So we all know, we all understand that if we have money, we can peacefully live our life, right? So what should we do to earn that money? Generally, we are in the learning phase as of now, correct? You all are studying, so this is your learning phase, right? When you start your job at around 25, 27, that's your earning phase. You start earning, correct? When you start earning, what should you do? Should you spend all of the money, or you should save? You should be saving, correct? And we all are good savers. Indians are the best savers in the world. But where we lack is investments. So the next thing that you have to do is start your investments so that the returns start coming. Okay. So when the returns start coming, it grows your money, because there is a difference between saving and investment. That investment makes your money bigger and bigger over a period of time. So whenever we earn through the main source, that is called the primary income, or the major income source, like when we do job or we do a kind of a business, right? And if we are a self-employed person, then we start some getting some honorarium for some kind of a role, or like a doctor or a lawyer, they get paid for their what do you call, the sessions or the whatever activities they do. Now this is the main source of income, but when we save some portion of this income and start investment, that becomes the secondary source of income. So however you are earning in through your first source of income, primary source of income, that will never be sufficient in life. So the secondary source of income should always be there. And you don't know, there is very less job security. Sometimes people loses their jobs due to any kind of circumstances. Then what helps them? The secondary source of income. Correct? So the first thing that you should do when you start earning is to plan. Okay, where am I right now? Where do I want to go? What do I want to achieve? From here, I want to reach somewhere. So the goals should be very clear. When we do goal-based investment, we get the tenure also, we get the period also. Like, for example, now I have kids. I know that after 10 years, they will be ready for their further education. So I am investing for that purpose. And for next 10 years, this investment is intact. I'm not going to withdraw this money because this is for this defined period and defined purpose. Correct? So when we do this way, things are more clear and purposeful and meaningful. Okay, so goal based investment should be there. Establish your goals, understand your financial situation, what is the total household earning, how much is that we can save. So the best thing is to write down your expenses. When we write down, not every month, maybe after 6 months you can just note down, or every year you can just note down that this is what I spent in the whole year. Now what should I do the next year? So implementing that plan is very important, and monitoring your investment is also important. Okay, wherever you have invested, it's not that just you will have to leave that. Now, why we should invest? Because inflation is there. This is very, very important to understand, because we cannot see inflation, but it has a big, big impact. Every 10 to 12 years, the value of the money is going to be half and the expenses are going to be double. So what should I do? Early investing will give me a time advantage. So here I have just quoted two examples, a person who started at the age of 25 and a person started at the age of 40. Here you can see the difference. Both of them generating the same return. The time period will definitely be changed, because someone started early will have time till 60 years. Right? At what age we retire? We retire at the age of 60. Now, this time period from 27 or say 28 till 60 is the most crucial time period. Here we are generating money. Here we are tripling our money. And then this money which we have accumulating during this period is going to be used after 60 years. How long we are going to live? We don't know. How many of you will mark a century in your life? We don't know. So 60 years till the age we are alive, we have to make sure that some source of income should be there. In India, what the survey says that people are asset rich after 60 years, but they are income poor. What does that mean? That we create assets like maybe a house or car or anything like that, but a regular source of income is sometimes missing. So we have to make sure that we don't fall into that category of person, and we are ensuring that some regular source of income should be there to make sure that we have the expenses, something to make up for the expenses. Correct? So what are the factors that affect asset allocation? Time horizon, your risk tolerance, how much risk you can take, because there are certain investments which are risk free, certain investments have risk. Right? So can anyone tell me which investments are risk-free and which investments have risk? Can you just write in the chat quickly, students? Okay, so I am just looking at who's promptly answering me. You have to be very quick. Okay, so index funding is what? Is it risk-free? Equities are comparatively risky, correct? So let's write first risk-free. Okay, bonds are risk-free, you're saying. Very good. Fixed deposits are risk-free. Absolutely correct. And what else? Treasury bills are risk-free. Okay. And so if I, categorize it in the segments, so I think the banking and the all these products of what you call post offices, these are risk-free, yeah, because they are giving us some assured returns. But when I talk about mutual funds, yes, mutual funds have certain categories which are risk-free, but most of them have some risk, okay, because they are dependent on the markets. So there is some kind of risk. There is no fixed return. In post office and bank FDs or maybe PPF, we know that for sure we are going to generate the fixed returns, correct? So depending upon your risk tolerance, you have to select the product, correct? Risk versus reward. Reward and risk go hand in hand. If we are expecting good returns, we have to take some kind of risk. Do you all agree with that? If you don't want the returns, you can go freely in the bank FDs, but that is not return generating options. If I give you 1 lakh rupee today and ask you to do an FD, how much return you are generating, students? What's the rate of return you're getting in FDs? Any idea? Oh, no one knows the FD rates? Come on, come on. I'm sure you must be aware. Just write any tentative figures that you know, if not exact. 5%, okay, Neha. 2 to 3%, that's very low. No, it's not. Until you are somewhat near. So on an average, no, 10% is too high. You're not getting 10% on FDs. So on an average, every bank is giving 7% return on average. Okay. So if I have given you 1 lakh rupee and you waited the whole year, how much you generated out of that? Can you tell me? 1 lakh ka 7% will be 7,000. Absolutely correct, Amit. Now, is this your net return? No, because there was impact of inflation also, which we never calculated. So if I consider 5% inflation, 7,000 minus 5,000, okay, 5% is on the lower side. How much is left in your hands? Amit, quickly write, how much is left? 2,000. Now again, Amit, is this your net return? No, there is something which you gave to government without, intent, like happily. You had to give this something, some gift which you never wanted to give to government. What is that? Which gets automatically deducted from this return? Tax, TDS, correct? So after deducting tax, now how much is left in your hands? Out of this 2,000, if you deduct taxes, it's something maybe 1,000, 1,200, something like that, depending upon in which tax bracket you are falling. So is this a return, a good return, which will make you happy, with which you can do party or spend somewhere? Not at all. But for next 7% return is yours. Nobody can take that. It's for sure. So if you talk about your parents, grandparents, they would be really happy doing an FD because they never wanted to explore capital markets, right? There were very less people who all, invested in stock market or mutual fund for that matter. So we have to understand whether I'm generating any return or not. So in that situation, I can take at least some calculated risk. Calculated means I will define the amount with which I can do my investments in stock market or mutual funds, not the whole of it. So that is what we call asset allocation. We call it diversification. And there is no perfect asset class which will give you all benefits. So let's have a combination. That's the only thing you can do, right? And tax saving options are also there. There are certain investments where you are able to save the taxes. So invest accordingly. Ajay, students, have you all invested in PPF account? PPF. Do you know what it is? You all must be 18 plus, right? And you would be having your bank account. So PPF is Public Provident Fund account. Okay. Writing it quickly. That is PPF, Public Provident Fund account. Now, quickly, I'll tell you 2-3 advantages. This is opened either with a bank or a post office. Why I'm suggesting you, although 7.1% is the interest rate here also, but here you are generating return on a compounding basis. So do you understand the difference between simple interest and compounding interest? Yes or no? Yes. Okay. Yes, you can show me a thumbs up also quickly in such situations. Fine. You all understand. So wherever you are getting a compound interest, do you think it will help you as compared to the simple interest? Will it help you? Yes, it will help me because in compounding interest, I'm generating return on return, return on the principal. Correct? So in this situation, PPF is one of the option, I think one of the only option in bank or post office where you are generating a compounding interest. It is open for a period of 15 years. You can start investment with just 500 rupees annually. That's the minimum. Okay. Of course, you can enhance your limit like 1,000, 2,000, 5,000, depending upon your budget. So even with your pocket monies, you can open your PPF account right now Keep it for a longer period, 15 years. After that, you can extend it for 5 years more, again 5 years more. So total in your life, you will have a PPF for 25 years. So the longer the duration of the investment, in compounding especially, the better will be the returns. Okay, and this is tax free also. Okay, when you are, you will fall into the tax liability under 80C, it will give you the tax benefit. Okay, I hope this is clear till now. So every product will have, different features, like I told you earlier. Some has liquidity, some has risk, some has returns, and some has, once again, the entry and the exit cost. So which benefit would you prefer? This will be your personal choice. You want liquidity, or you want risk, or you want the returns. So I hope students, you understand what is liquidity. Do you all understand? Liquidity means how fast, how quickly I can convert my investment into cash. So this is also one of the important things. Now tell me, how many of you believe that investing in real estate is a very good option, or in properties is a very good option? How many of you believe? Or your parents must be investing in properties. Traditionally, people used to invest in properties a lot. Okay, Fatima says, no, I don't believe in properties. It's a huge investment, firstly. For long term, yes, it is for long term. But it's not liquid, correct? If I have bought a 10 lakh of house and I just need 1 lakh suddenly, can I withdraw from that house? No, that is not possible. I will not get a buyer, and there is no possibility to sell a room or a kitchen. I have to sell the whole house. What will I do with that 9 lakhs now in hands? Again, I have to rethink of investing it. So my point is that no investment is perfect. So make a balance. If you want less risk, then go for bank deposits or post office. How about gold, students? What do you think about gold as an investment? Anything that you would like to share? And what's the gold price going on, if anyone follows it? Not good currently. Okay. But, okay, what's the price, Ame? Any idea? Or anyone else can also answer. Okay, without Google, huh? 1,60,000 something for 10 grams of gold. Correct? Now, if I say that 16 years back when I got married, at what price I would have bought the gold? Can you just make a guess? Yes, absolutely, Tariq. Tell me. 30, 40. Okay, it was even lesser. I bought it at 14,000. If I talk about like 17 years back, 14,000, and now it is 1,60,000. You ask your parents also. They must have bought at a very low price some point of time in their lives. So now, if any asset can go at such a level, even if it's down right now, it is still much higher than what I bought 15, 16 years back. So this is, I think, the highest return generating option. But what do you think? We should buy physical gold for an investment? We should buy ornaments, or we should buy something else in gold investment? And if you think that gold should not be in your investment part, then that is also okay. What do you think, students? Anything you would like to say about gold? Quickly. Okay, so what are the disadvantages of buying a physical gold? If I buy some ornaments or some jewelry, digital gold seems to be a very good option. Yes, absolutely correct. Amit, can you tell me disadvantages of physical gold? Or Anshika, anyone? Theft, storage, absolutely correct. And there is one more thing. I want to see that answer. One thing that I have to pay when I buy the gold item. There's something additional I have to pay. Absolutely correct, Rishika. That's making charges we have to pay, correct? And of course, GST and taxes and all that we have to pay. So what we can do, we can avoid all these things by buying the digital gold. Can you tell me 2-3 options of digital gold, students? You must have heard about it. Then I will tell you what are these. If you have any idea in terms of, so have you heard about sovereign gold bonds? Have you ever heard about this term? So this used to be a bond which was issued by RBI till last year. It's no more, new issue is stopped actually. Someone who bought that could keep it for 8 years of period, but this is not there anymore as a fresh issue. Now, what we can do is we can buy gold mutual funds, which in which the investment is further going in gold. We can buy gold ETF, even silver ETFs, exchange traded funds, which is a combination of mutual fund as well as stock. So I need to have a demat account to buy the ETF. And the advantage is that because I cannot invest 1,60,000 in one go. So for small investment, these digital golds are offering us good opportunity, right? And however the gold is performing, whether it's going up or down, accordingly, my investment will also perform. One thing I wanted to tell you, students, the basic question that comes to our mind is that within how many years my money is going to be double. So there is a rule that if you divide 72 by the interest rate, you will get the number of years in which your money will be double. So 72 divided by say 8% in 9 years, 72 divided by 10% if I'm getting, then it will be 7.2 years. The more the interest rate, the lesser will be the period in which your money will be double. Okay, now let's understand the securities market structure because this is very, very important. Now, students, do you know who's the regulator? You can see the name is mentioned. Who will tell me the full form of SEBI? Quickly. What is SEBI? SEBI is one of the regulators which is regulating the capital markets. Can you tell me the full form of SEBI? Securities Exchange Board of India. Absolutely correct. Ananya, Gautami, Aparna, very good. And you were very quick. Very good. Esther, Nandana, very good. Now, tell me, we have one regulator which is regulating capital market, that is SEBI. There are few more regulators. Let's talk about them. Who is regulating the banks? Who is regulating RBI? Very good. Then who's regulating the insurance? No, Arun. LIC is one of the company. Very good, Nandini. ADA, Sana, Abhinav, very good. Okay. Insurance Regulatory Development Authority. And there is one more product which is coming in the financial market, that is called the NPS, New Pension Scheme. Anyone has heard about it? Like there are, people who don't get pension in private sector, so they can do investments in NPS. In government, central government has made it mandatory for all the employees. Some of the state government has also made it mandatory. That is the NPS. Like some portion of their salary will be deducted and invested in NPS. Who is regulating NPS? I'm sure you must not have heard this product because it's generally for someone who's in the working sector already. So this is PFRDA. Okay, you can explore something about that. So today, if you're hearing some new terms, please go and check again. Try to find out more information about it. Okay. Yes, so PFRDA is Pension Fund Regulatory Development Authority. So there are primarily four regulators that are governing the financial and capital markets. Now, SEBI is the regulator. How many stock exchanges we have? Because under SEBI, there are stock exchanges, there are depository. How many stock exchanges we have? We have 2 stock exchanges. The names are, you have to tell me the names also. NSE, BSE, absolutely correct. So these are 2 equity stock exchanges. If I ask you, there are commodity stock exchanges also. Like we can deal in okay, Bombay Stock Exchange and National Stock Exchange is fine. Now, which 2 commodity stock exchanges you have heard? Like we can deal in gold as a commodity, spices, wheat, rice, crude oil, or anything, any items like that, metals. So do you know there are commodities also which we can buy? So there are 2 stock exchanges who are handling those commodity. Anyone knows the answer? Absolutely correct, Fatima. That is MCX. And another one is NCDX. Very good. Very good. So you are smart students. Okay. So we are clear about that. There is a 3rd stock exchange also. Do you know? If someone would know this answer, I would really applause for that. Very good, Fatima. Absolutely correct. That's MSC. Okay. So what's the full form? You guys are very smart, है ये भी पता है आपको. This is a very unique answer. Most of the students, when I ask this question, they don't know the answer. That's Metropolitan Stock Exchange of India. Although it is there in the system, but very less stocks are available. Okay. Now there are clearing corporations also. Clearing corporations are entities which are making sure that every day the trade is happening. So any party who does the default, the other party should not bear the impact, right? So clearing corporation makes sure that they are actually penalizing those defaulters and making sure that the settlement is happening. So every stock exchange will have one clearing corporation. Now, what about the depositories? When we open Demat account, we have to open under some depository, correct? So which two depositories are there in India? I'm sure you know this answer also. NSDL and CDSL. Sri Lakshmi, very good. Very quick. NSDL and CDSL, these are the two depositories. So shall I visit NSDL and CDSL office and ask them to open my account for my Demat account? Is that how it works? Or there is any other intermediary involved in between with whom we open the accounts? That is called the brokers. Very good. Or either banks who are authorized to work as depository participants, where I can open my Demat account. So depositories, NSDL and CDSL is the principal and depository participant is an agent, right? If I have opened account and kept my 1 lakh rupee with any broker and that broker defaults, my 1 lakh is absolutely secured because that is with the depository. Okay, 1 second, please. Okay, sorry. Fine. Now, what's the way when we want to do our investment in the stock market? There is two ways of doing it. Either we apply in the IPOs. That's the first step. That is when the company is coming up with the issue, and that is called the primary market. If I apply an IPO, I don't get the allotment. I have another option. When the stocks will be listed on the stock exchange, I can buy it through my broker. That is called the secondary market. Okay, so applying in a IPO can be done through online, which is called the ASBA facility, or it can be done through offline option. Now, when I open account, I have to pay certain charges, annual maintenance charges to my DP, correct? There is a process that if you are a young and new investor or someone who's dealing in a lower scale, like some very little of investment that person is doing, so that person can save the charges by marking that account in BSDA, like basic services Demat account. So whenever you are opening through online way or physically visiting the broker, in the form, there is an option to tick against this BSDA. This will save your charges. So if you have holding till 4 lakhs, you don't have to pay any charges. If the holding is from 4 lakh to 10 lakh, you have to just pay 100 rupees annually. And if any time it goes above 100, because the markets are not flat, it never goes like this. Okay. How have you ever done your ECG, students? Do you know what ECG is? Yes or no? Or you have not heard this term? Okay. ECG is basically that measures our heartbeat. Hai So ECG is always like this. Upar, niche, up, down, up, down, up, down, up, down. It never goes like this. And no one wants to be like this because this means the person is no more. If the line is just going like this. So just relate this with the stock markets. Stock markets are also like this, up and down, up and down. It never goes like this. That's the behavior of stock market. So whenever there is good boom in the stock market and the valuation suddenly goes up, then you will be into a normal regular account if it goes above the 10 lakh. Acha, 1 second. I'll ask this question. Students, you have a bank account, all of you? You must be having your bank account, right? Correct? So in bank account, how do you manage the account? Like as in, what is the balance? What is the debit, credit? How do you manage that? What do you see for that? Passbook, correct. And what else? Alternate to a passbook is what? Transaction list. That is called a statement. Hana, Arun? That's called a statement. Or we log in the net banking. Hana? All these things we do. Now, suppose you have 3 or 4 bank accounts. You will get 4 different statements or you will get one single statement. If you have 4 accounts in different banks or maybe with the same bank, you will get a single statement or 4, 5 statements. Different statements. Absolutely correct. Separately we will get. But do you know in capital markets, there is a very good thing that you have received is a consolidated account statement. So if I have 4 demat accounts, 4 mutual funds, I will get one single statement in which every investment will come, which is under my PAN number. Okay. And it will show me how my investment has performed. Like when I see my cash, I saw like last 2-3 months, there was a negative balance. It went down. So it was showing me in red, minus. Then again, when it covered up, then it will show me in green, plus. Okay. So I will get to know that the whole investment which I have done in last 16 years, what is the CAGR? CAGR, you understand, I hope, compound annual growth rate. Whether it's 15%, it's 20%, or it's 25%, or 40%, whatever. Okay, so everything will be reflected in one single statement. It will come on your email ID if you have chosen that e-cash, electronic cash. Otherwise, you can opt for a physical cash also. Now, when I want to buy the shares in the secondary market, I will have to place an order with the broker. So mode of placing order will be either through a call or a text I can do, or visit them, or through their apps. Nowadays, things have become really, really easy and user friendly. Every broker has launched its app. You can simply download the app, do the transaction online. When you buy the shares, okay, there will be a contract note, which is a proof of your transaction, which you will receive immediately after 24 hours of your transaction, and it will come on your email. And this is a very, very important document. Okay, suppose there is some kind of a dispute or any problem happens, you want to lodge a grievance. The first thing that SEBI or the stock exchange will ask you to show the contract note. Okay, so please save this. Whenever you're getting on email, take a backup of it. Actually, one thing I wanted to know, students, when I'm buying the shares, within how many days I'm getting the delivery of the shares in my demat account? Do you know the answer? We call it T plus something. Absolutely correct, T plus 1. Fatima, we are at T plus 1 now. Okay, so T plus 1 means if I'm doing the trade, like buying any share, I will receive the share in my demat account the next day. If I'm selling shares, I will get the money in next day. That is called the pay in and payout of the funds. Okay, and there is exchanges, there are brokers who are involved in between. There is margin pledge facility also, which has been effective from 2020. Whenever we are doing in transactions or trade, some kind of pledging we have to do as margin in favor of the stock exchange. So earlier that used to be in the form of cash, or the shares needs to be transferred physically to the broker's account. Since 2020, this is stopped and the pledging is happen in the account in terms of margin. So the shares are in my account only. They are pledged in favor of the stock exchange. So it is in my security. Okay. There is one more advantage, or you can say benefit of a demat account, that I can pledge my shares. Have you ever heard about it? What do I mean by pledge? You understand what is pledge? Have you heard about Muthoot Finance or Shriram Finance? Do you know why they are famous? For what kind of product they are famous? Anyone can tell me? Muthoot Finance, Shriram Finance. They're famous for one particular thing. Any clue? Mortgage. Loans from collaterals. Yeah, but what do they keep as a collateral? Very good, Ananya. That is gold loan. They give loan against gold. So if I have some physical gold at my home, I know that I'm not going to sell it. I don't want to sell it rather. But I want some money, some cash I want. So I can pledge those gold, those items, and take loan. But I have to give the delivery to that entity. I have to give that delivery after, say, 2 years. If I'm returning the loan, that I can take back my gold. That is how it works. In demat account, if I have shares, I can pledge it against NBFCs, banks, or any third person for that matter. Like if I and Anjali ma'am make an agreement that I want some money, and she said that it's okay, I can pledge your shares, right? So I will pledge my shares. It will lie in my own account, but it will be pledged in favor of Anjali ma'am. So next 2 years, I cannot sell those shares. I cannot transfer those shares because they are now in favor of Anjali ma'am. In my statement, it will be reflected that these shares are pledged. Pledged means it comes some sort of, locking is done. Lock-in means that I cannot sell or transfer those shares. So after 2 years, when I repay the shares, then it will be free. Now, these were the capital market instruments. There are some debt instruments also, which are also coming under capital market. That means I can keep in my demat account. Some of them are issued by financial institutions and some issued by the government. Like initially you told me treasury bills is one of the investment option, right? So bonds, commercial papers, debentures, CD, all these are issued by financial institutions. So bonds is something which all of us can access because the amount is small. So it has a fixed tenure and fixed coupon rate, in which if I do the investments after certain periods, say suppose the lock-in is 10 years. After 10 years, I will get my money. And during these 10 years, every year I'm going to get some interest. That is called bonds. So you know that SEBI has launched this platform called online bond platform. Okay, you all can explore these things later on. So in this platform, all those companies which are issuing bonds will be available in one single platform. You can compare, you can see the interest rate, how the redemption is. So every company will be given a rating. So the highest rating will be A++. So you can see and buy those bonds which have a good rating. Okay? Is this clear? Show me a thumbs up, everyone. CD and CP are investments which are done by the institutions, not individuals, because one CP, one CD value 5 lakh rupees. Okay, so that's why we as an individual generally invest in bonds. Then there are government securities also, treasury bills also. And do you know how we can buy the government securities? RBI has launched this RBI retail.com. Okay, that's the platform rbiretail.com, from where we can buy the government securities online. Okay, done. Okay, now government securities are issued by RBI whenever there is a maturity period up to 1 year, that is called treasury bill. If it is more than 1 year, that is called the government and dated security. Fine, clear? Now, we have spoken about investments like, stock market, all these things like the bonds, debentures, all that we have spoken about. Now, when I'm investing in one particular stock, my exposure is very high because my risk is very high. Now, with whether this company will perform or not, my returns will be dependent on that particular company. Correct? Now, I am such a person who wants to do investment in stock market, but I don't want to choose the funds on my own because I don't have that expertise, that knowledge. Okay, whenever we fall sick and we do self-medication and it doesn't work, where do we go? Whom we approach? Who helps us in that situation? Doctor. Why doctor? Why don't you visit a tailor or a barber? Or a carpenter for that matter? Because you know that doctor is the expert in his field. He's professional, right? So we have a professional in mutual fund inherent, and we are not going to pay him additionally any salary or something. That's called the fund manager. Specialized, absolutely correct. Stock brokers are not specialized people. They're brokers. Sometimes they have experts also who are giving you expertise about certain recommendations also, but we have to find out the right expert. Now, sometimes, initially there were agents called insurance agent, जो generally LIC sell करते थे. If a LIC agent comes at your home and your parents must be buying LIC policies from that, do you think he's someone who will help you in stock market investments also or mutual fund investments also? Yes or no? What do you think? No, because he is an LIC agent. He does not have that expertise. So we have to see that it's not necessary that he is also selling something, some financial product, but that product expertise should be there. So any mutual fund distributor will be an expert. He must have cleared a certain exam of NISM and then only he got that qualification, and now he's able to sell the mutual funds rightly. So find out the expert for yourself. This is also a very important thing. Okay, so mutual fund is something which is low cost. You can start your investment with 500 rupees per month. We call it SIP, right? Systematic investment plan. There is liquidity. If I have 10 units in my account, I can sell 1 unit also. That is also possible. It is regulated by SEBI. So any product that we are investing in should be regulated. It's very convenient. Do I need a bank account to start my mutual funds? Students, yes or no? Do I need a bank account? You can show me thumbs up or thumbs down also. Like that, I will understand. So Ame says yes. Aparna says no. Okay. Okay. Now the next question is: do I need a bank account? Demat account for mutual funds? Abhinav also thinks yes, we need a bank account. Yes, we need a bank account. It's compulsory. Without bank account, we cannot start our investment. Demat account, yes or no? No. Very good, Ananya. We don't need a demat account. It's not compulsory for mutual funds. Okay. I just need to have a bank account from where the debit will happen, from where the money will be deducted. Demat account, if I have, I can keep my mutual fund there. If I don't have, that is absolutely fine. Fine. So these are the advantages. Now I need to understand which mutual fund I should be investing in. So just look at this particular slide, students. There is one category called investment portfolio. Okay. Now here you see there are 4 varieties of mutual funds: hybrid, equity, debt, and liquid. So what's the difference? So if you are someone who can take risk, because you all are young, so I think you can take some bit of risk. The best suited mutual fund for you will be the equity funds, because they would be investing all your money in stock market. Which stocks they are purchasing, that is not my concern. Who will decide that? Fund manager will decide that. He will be someone who's actively engaged in that, and he invests in multiple stocks. He will not invest in one single stock, multiple stocks. Okay. So this is the equity funds. If I'm someone who don't want to take a risk at all, I should be investing in debt funds, because my money is going where? In government securities or bonds, where there will be a fixed return, and that return will be passed on to me. Is this return very worth? It will vary between 9 to 10%, but in equity, you can expect 15%, 20%, and even more than that. Okay, got my point? So the higher the risk, the better will be the returns, but still you have a lot of variety available in mutual fund you can choose. Now, if you are someone who wants to take balanced risk, which means you want some returns as well, then you will have that option of hybrid funds. Okay, in hybrid funds, some portion is going to be invested in equity, some portion is going to be invested in debt. Balance. Okay? And if you are keeping money in your savings account, you will be hardly generating 3 to 4% return, hardly. But the same money, if you keep in liquid funds, which is as liquid as your bank account, then you will at least generate 6 to 7% return. Okay? Redemption is also very simple. Got my point? Now, there are other type of funds also. Someone is having any particular purpose, like I want to invest for the education of my child. I can invest in education fund, which is locked in for a period of 5 years. I'm someone who's retiring. I want to invest in retirement fund. That is also possible. Okay. I want to save my taxes. I can invest in ELSS. This is a scheme called equity linked saving schemes, where I will save my taxes. Or I can invest in ETFs, which can be a gold ETF, silver ETF, or any other ETF. Now, how should I invest? I can invest through SIP, through lump sum. Okay. SIP means I have decided a certain amount and a date on which my debit will happen. And this is a good investment for any salaried class, because it is going in installments. Okay. Discipline is created, because when we have decided the date also, then we are making sure that before spending the money, my investment is done. And I'm getting the power of compounding. Now, this is very important slide, students. I wanted to explain this to you. Suppose you are investing in equity mutual fund. Now, what will happen in equity mutual fund? Not all the time markets will be same. Sometime market will be down. Sometime market will be up. Correct? Now, just see this example. If I'm investing 10,000 every month and there is rising market, then according to the rising market, the NAV will also be rising. NAV means net asset value per unit value of the mutual fund. So if the NAV is rising, which means less units will be purchased. But if there is falling market and NAV is falling, more units will be purchased. So this is happening every month, depending upon the market. So like suppose I have decided 5th of every month, 1,000 rupees will be deducted. So according to the markets, on the 5th of every month, units will be purchased. According to the NAV, units will be purchased. So this averaging out can be possible. This is a hidden advantage in SIP, which you will not get in lump sum. Lump sum means you have done the investment once and now you can keep it for 2 years, 3 years, whatever. This is one-time investment, correct? So you will not get the rupee cost averaging here. So that is why SIP is, I believe, a good investment. Just look at this chart also. 1,000 rupee SIP if I'm doing, depending upon the scheme, debt, balance or equity, I'm generating return. This is a very conservative returns which are shown here. And even if I follow this, in just 15 years, you will be able to see how much your money has performed. Your 1,80,000 are becoming approximately 50,000 in equity. And just 1,000 rupees you have invested. So the longer period, and time passes like this. 1,000 rupee every month is not a big task. How should I start my investment? Even many students, when I visit universities, colleges, I see there are many students who have started their investments. And I really appreciate that because the awareness is so much. And it's also good for you. Okay, so physical, online, or through distributor, anyway, you can start your investment. Lump sum, SIP. Now there is SWP also. Suppose I have accumulated 1 crore in my whole career. Now I want to withdraw my money. Okay, and I don't know. I mean, I don't want the whole amount together. Where will I keep that amount? So I want a regular income. Even especially after my retirement, I want some regular source of earnings. How is it possible? That is possible through SWP. Okay, so this is also one of the good option. Many people are nowadays opting for SWP. One second. Now there are systematic transfer plans also, wherein I can transfer from one plan to another plan. That is also possible. Index funds are also one of the funds. Okay, I'll just skip this slide and then ask you, how many of you know what is an index fund? Okay, so who will explain in just one single line what it is? Okay, anyone who's raising hand? Index funds. Okay, I'll tell you through an example. Copies the market index, correct? So there are so many banks. Okay, I want to buy a bank stock, but I am confused which bank should I buy. So what can I do? I can buy a bank index, which is a combination of all the bank stocks, average price of all the bank stocks. So I'm just following that bank index. If the bank index is going up, my investment is also going up. If it is going down, my investment will also go down. So it will replicate the index. That way, index is good for someone who's a passive investor who don't want to take risks. So your exposure is not in single bank. Your exposure is on all the banks. So definitely their performance will be better than a single bank. Okay? So there are multiple index, Nifty, Sensex, Nifty 50, Top 50, and other particular sector indexes are also there. So that is also one of the good investment. Okay, gold investment we have already discussed. Now, what is important when we do investment? Nomination is very, very important because after I'm no more in there, who will get the investment? It should not go to the government, right? It should go to the right person. So I am nominating someone that can be in my blood relationship. I can change my nomination anytime. I can nominate 3 people and assign them the percentages or equal share, whatever I want. But nomination should be there. Okay, in all accounts rather. Okay, one more thing, students, do you think insurance is important? If it is important, which 2 insurances are must? This is called the contingency fund, emergency fund. Insurance should be a part of it. So Amey, which 2 insurances? Life and health insurance. When I talk about life, is this endowment? Is this ULIP? Is this money back? Or is this term insurance? Tell me. Which one is this? Term insurance, absolutely correct. Term insurance means throughout my life, I'm not going to get anything. And I wish that I don't get anything even afterwards also. I want to live my life. So term insurance means if something happens to that person after his death only, the family will get the amount. So ideally, when how much amount should I insure for myself? Whatever will be my annual income. Suppose my annual income is 10 lakh. So 10% of that annual income should be my cover insured. Okay. So suppose I'm earning 10 lakhs annually into 10%. Sorry, 10 times, not 10%. This is 10 times. So 10 times means approximately above 1 crore should be my sum insured, at least minimum. Okay. So that is one thing. Health insurance is also important because health expenses are rising so high. Sometimes on a very emergency situation becomes really difficult to arrange the cash, right? So if I have taken the health insurance, that I'm rest assured that at least the hospital expenses can be taken care by the insurance company. I can go cashless, right? I hope you understood. Now, what about the loans? And who all out of this group is a EMI lover? I'm really excited to know that. Do you know who is a EMI lover? Yes or no? Okay, show me a thumbs down if you don't think that EMI is a good option. You this concept of buy now, pay later a lot. Government insurance is secure. Yes, insurances are secure. Government insurances are there, but the amount, some insured is not too good. Okay, so Amey, I tell you, this is PMJJY, and this is another one. Okay, these are two insurances you can explore. You can open this through your bank accounts. Against the payment of 456 rupees, sum insured will be 2 lakhs for life and 2 lakhs for this thing, accidental insurance. Okay, you can explore these. You can start your insurances. Claiming, I really don't know. I have not seen any instance where someone faced any issue, but this is a very what you call cheap insurances, but that amount is also very low. 2 lakh is nothing nowadays, nothing, frankly. So that's why people go for the private insurances. Term insurance and endowment plan. So term insurance is basically when something happens to you and then you receive that amount, like after the death of the person. Endowment plans are for a specified period. After that period is over, you will get your money. So it can be to the person who got insured. It might be the case that I only will receive my endowment policy. Okay. So in this situation, the amount, the sum insured will be less. Endowment plan, I will get, it's like an investment, you can say. That after the like 10 years are over or 20 years are over, I'm going to get this money back. Okay. Okay. So I was talking about the loans again. So please avoid using credit cards, avoid using EMIs. There are only two loans. Okay. Fida, can you keep yourself on mute? Yeah. So there are only two loans which are considered to be good loans. Can you tell me the names? If you know by chance, two good loans. Any idea? No idea? Education loan, very good, Ansel. That's absolutely correct. Very good, Ananya. One more loan is home loan. Correct. These two loans are still considered to be the good loans. Okay. So please make sure that whenever needed, then only you take loan. Otherwise, you can delay your goals or your targets for some time. Accumulate your own money through your investments and buy those things, whichever you want to buy. All loans seems to be burdensome. Absolutely correct. So now scams are also increasing because we are into this digital world, especially the digital scams are happening a lot. Like someone is saying that we will give you 100% return. Someone will tell you that download this particular app or join my chat groups or share the login ID passwords or any kind of unusual activities that are happening. You should be really, really cautious about it. There is a cybercrime number 1930 where you can immediately call. Along with this number, there's one more number which is called 1945. These are two numbers. Okay. Now there's some small basic questions I have kept as a test for you. So you have to read the question. So I'll read the question for you. I'll not read the options. You will have to type the answer A, B, C, D karke. Okay? So what's the primary benefit of compounding? That's the first question. What is the correct answer? B. Okay. Fine. You have to be really prompt. Next question. What is the main purpose of diversification in our investment portfolio? Again, answer is B. Very good. What does the risk-reward relationship in investing imply? A. Absolutely correct. Fund.
Hello, ma'am. Yeah.
Something happened at my side. I think
Yes,
so.
ma'am. You were not audible for some time.
Okay. Okay. Now is that okay?
Yeah. Yes.
Okay. The next question is, what is a mutual fund? B. Absolutely correct. Next question. Which of the following is a benefit of investing in mutual fund? This is question number 2. B. Absolutely correct. Last question. What is an equity mutual fund primarily invested in? Absolutely correct. The answer is C. Very good. So I think you all have understood it. Great. Very good. Okay, so I'll take your questions after 5 minutes. Just a few things I wanted to share with you, students. This is one SEBI investor certification exam. I hope you all participated very recently in this NFLQ, National Financial Literacy Quiz. You did, right? NFLQ? Yeah, great. So there is one more opportunity to grab this SEBI certificate. But here your percentage will matter, not like NFLQ. So here there are 50 questions, out of which 25 is the passing. So if you get 25 and above, then only you will be able to get this certificate. Please take a screenshot or take a photo, and I'm just putting my referral code, that is 1039. So when you will do the registration and put my referral code, it will not ask you to pay anything. That will be free of cost. Okay, once you have taken the picture, just show me a thumbs up. Then I'll move ahead. Great, great, great. So all of you will do it. You will post on LinkedIn and you will tag me. Done? What's my full name? Who knows my full name? Who heard the introduction very carefully? No one. Actually, what's my first name? Yes, absolutely correct. Himani Lath, and you will find me on LinkedIn. Okay. And then you can post your certificate, tag me there. I will be really glad to see that all of you have done it. Okay. Now, one more thing, SEBI has launched this investor website specially for investors to enhance your knowledge about all the stuff related to capital market. Either you can go to the website or you can download the Sarathi app that is available on your phones. On this Sarathi app, you will find a very interesting thing. There are a lot of financial tools and calculators. Like suppose you are confused what amount of SIP you should start. And after 5 years, if the interest rate is say 15%, how much my money is going to be. So it will show you the output. You put some information and it will show you the output. A lot of calculators are there. Retirement calculator, EMI calculator, and all that are available. A lot of good videos, articles are also there. So please download this app, access it, and you will get more information. They keep on updating it also. A lot of new features they keep on adding. Okay. So I think the feedback link ma'am is going to share. Ma'am, you can show that on the screen, and meanwhile I'll take up the questions. So that's all, students, from my side. It was lovely interacting with all of you. Now we can take up the questions. You can quickly write in the chat box and we will discuss. Anything that I left out by mistake, you can ask that also. And meanwhile, Anjali ma'am will show you a feedback link. You have to put your feedback in that, and based on that, you will get your participation certificate also. Thank you so much, Ame, and you were quite interactive. You were quite fast in answering the questions. Thank you so much. Thank you. And students, please don't leave. We are going to take a group photograph also. So if you are at home, quickly comb your hair, and with a smile on your face, let's quickly switch on your cameras. We'll take a group photograph. And meanwhile, ma'am will also show you the QR code. Anjali ma'am, are you going to show them the QR or
Yes,
the link?
yes, ma'am. We are doing it.
Okay, okay. So I think we'll take a photo once ma'am has shown you the link. So just wait for 2-3 minutes. Thank you everyone for your feedback, for your responses. Actually, did you learn something new today? Anyone can write, in just one line, anything that you learned for the first time, you heard for the first time. Actually, I'm just writing one more website. It's just strike me, mutualfundssahihair.com. Okay. This one also you can refer. Okay, so I have told you the new platform for the bonds, online platform for the bond. I told you about the RBIRetail.com from where you can buy the government securities. I told you about the SEBI website and the Sarathi app. I told you about mutual funds website. And there is one more website which is called Amphi. Okay. And one more thing, there is nism.ac.in also, in which you get lot of certifications which are related to capital markets. And when you want to pursue your career in BFSI industry, these certificates are going to really add value to your CV. And these come with a validity of 3 years period. So whenever you are in the final year, you can do any of the certification which is of your interest, in which particular line or direction you want to pursue your career. And this will help you in your placements also. Okay, done. Have you all seen the feedback link which ma'am has shared with you? You have all seen that? It's there in the chat. Okay. Meanwhile, please quickly switch on your videos and we'll take a group photograph. So after that, we will close the meeting.
Hello, ma'am.
Yes, ma'am.
Ma'am, we have a valedictory. We have a vote of thanks as well before ending the session. So after the photograph, we can move on to that.
Sure, ma'am. Sure. So I want to see maximum people on the screen. Aparna, you are there on the first screen. Jeswin, you are there on the first screen and your videos are off. Okay, and you have to keep yourself a little still Okay, I'm going to take the screenshot. Anyone wants to open? Okay. One second. Okay, I think it's done. Thank you so much.
Ma'am, just wanted to inquire whether there are any questions to be taken.
No, ma'am, I did not see any questions.
Okay.
I think the concept is clear to everyone and they already knew a lot of things.
Okay. Okay,
Yeah.
ma'am. So we can move ahead with the vote of thanks. I invite our scholar, Annie Joseph, for the vote of thanks.
Good afternoon, everyone. And now that the session has come to an end, we express our sincere gratitude to our esteemed resource person, Ms. Himani Lath, SEBI SMART Trainer, for conducting this highly informative advanced financial literacy program. Thank you, ma'am, for breaking down critical financial concepts so practically. Your insights on structuring personal budgets, navigating debt management, and understanding the core fundamentals of investing has provided us with immensely valuable takeaways. We would also like to thank a diverse audience, economics and finance students, research scholars, and industry professionals. Your participation and engagement have made this session successful. Thank you all and have a wonderful evening ahead. Thank you.
Thank you so much, ma'am. Suddenly a question has come, so let me just answer it, then we'll close the meeting. So Tariq has asked this question, how much percentage of income we should invest? So Tariq ji, it all depends upon your expenses. Like, out of 100, what is that you are spending? So ideally, there is a 50-30-20 rule. You must have heard that, 50% we spend on the needs, 30% we spend on the wants, and 20% is what we should ideally save. Of course, every household will have different percentage of spendings, and accordingly, you have to, save. You have that saving. Like if you have 30% saving, then it's absolutely fine. If you have 50% saving, that's nothing like that. So out of those savings, at least if you can keep some portion in bank, which is needed for your online transactions and all that, rest of the money should be invested. Okay. And again, how much should you invest in equity? You can decide 100 minus your age. So suppose I am 40 years old. So 100 minus 40 is what? 60%. That 60% I can invest in basically equity. That is ideal for me. When my age is increasing, like I'm 40, I'm 60 or I'm 70, then lesser percentage should be in equity. And rest you can decide and you can diversify in different investment option. So ideally, if you talk about my personal investment, I've invested in stocks, mutual funds. I have a PPF, I have a FD also, I have investment in bond also, I have insurance also. So everything I have kept, because every fund or every investment has its own benefits and own advantages. Okay. So that's it. Thank you so much, everyone. I hope we will connect sometime again with a different topic and with different, maybe different audience also from the same institute. Okay, thank you, Anjali ma'am, for all that coordination. Okay, thank you, everyone. All the best. Good luck for your future. And I hope everyone has filled the feedback form, because then only you'll receive your certificate. Okay, bye. Thank you.
Thank you, ma'am.
Thank you, ma'am.
Thank you, ma'am.